What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Guys, do me a big favor. Get yourself down in the description box and click on those links that I got down there. Now, for those of you guys who are saying, hey man, why would I click on those links? Listen, you don't have to click on them. I'm just trying to offer you some opportunity here. The number one opportunity is Moomoo. If you open a new Moomoo brokerage account, you can get up to $1,000 in NVIDIA stock. Now, of course, you got some deposit requirements you got to meet in order to get this, get the stock. But I've been rocking with Moomoo for over, 2024. And I got to say, man, it's a really good self-directed brokerage app. Now, you got to go out and fact check that and do your own homework. But if you're looking for a self-directed brokerage app that has fractional share trading, automatic investing, those types of things, try Moomoo. And if you decide to open your new Moomoo account, you can get yourself up to $1,000 in NVIDIA stock. So go check out that first link, which is that Moomoo link. Second link I want you to consider checking out is the Wealth Builders Financial Community on Patreon. Now, in that community that I started in 2024 on the Patreon platform, we got a couple thousand wealth builders in that community. And all we do in that community is help each other build wealth. None of us are experts. We don't try to be experts. All we do is share best practices. We share golden nuggets and tips. We share what's working and what's not working in our wealth building strategy. And we have a live stream every Monday night at 8 p.m. Eastern time where we all come together and just talk about ways to build wealth. Just regular folk coming together out of the matrix, trying to help each other build wealth, get to passive income, right? So if you're interested in that, click on that second link. It'll take you over to Patreon and sign up and come join us. And then send me a direct message, a DM to let me know you're rocking with me. And then we can go to work. One more quick little thing on the Patreon. That's really the only place that I'm chopping it up with people one-on-one. Again, if that's important to you, join the Patreon. If it's not important to you, then of course you won't join and you can just go on and do whatever you're going to do in the matrix. But if you want to get yourself out of that matrix, guys, and get around some people that are going in the same direction, which is financial freedom, check us out. Second link, Patreon. Well, all right, guys, let's dive on into our topic today, which is the Fed rate cut. And if they do cut rates, could it possibly skyrocket stocks and crypto? Well, let's take a look. Let's take a look at the probability of a Fed rate cut in December, more specifically, December 10th, and how that could affect assets. Y'all know I'm a big believer in when rates go down, assets go up. I'm a big believer in that. Quick disclaimer, I'm not a financial advisor. This is not financial advice. I'm just a regular person on YouTube giving you his personal opinion about these topics. Now, since I'm not a financial advisor, you got to go out and do your own research, own independent research, come up with your own conclusion before you make any investment decisions. If you are not comfortable making your own investment decisions, go get yourself a professional financial advisor, because this is not financial advice. This is strictly me giving you my personal opinion. So now that we got that out of the way, let's move on to why rate cut December 10th is back on the table. Here it is. As of late November 2025, futures market, as tracked by the CME Fed Watch tool mentioned by NBC, show an approximately 83 to 85% probability of a 25 basis point rate cut at the Federal Reserve's December 10th meeting. There we go. If you've been rocking with me and you've been watching my videos, you'll know last week it was down to 40% rate cut probability. Now it's jumped up to almost 85% probability. Now, is that a guarantee? No, that's no guarantee. That's just telling you what the experts believe the probability of the Fed cutting rates. This high probability is supported by recent dovish comments from Fed officials. We'll dive into that a little bit more to tell you kind of what that means in my opinion. Also, who have indicated the job market may be weak enough to warrant an additional rate cut. Remember, they've already cut rates twice this year. This would be the third 25 basis point rate cut. Despite the data blackout caused by the recent government shutdown. So here we go. We know we got an 85% probability. Again, no guarantee, but certainly people are thinking it's going to happen. Right? Then you got the dovish comments from the Federal Reserve officials. And all that means is these people are now starting to support a rate cut. That's dovish. If they did not support the rate cut, that would be hawkish. See, dovish means they're loving the idea. They're more friendly to the idea of a rate cut. Hawkish means, we ain't doing no rate cut. So now you got more officials being dovish. You also see a weakness in the job market as indicated by some data points. What are those data points? Recent numbers from ADP. Recent unemployment rate went up, right? So things like that still point to our labor market weakening, guys. And you know, if our labor market weakens too much, what does that do to our economy? Typically, it throws our economy into a recession. And if our economy is thrown into a recession, y'all know that ain't good. A recession's not good, right? So what the Fed is potentially thinking about doing for the third time this year is to cut rates to incentivize or to stimulate growth in the economy, to actually make sure that the labor market doesn't further deteriorate. Yep, so that's what you got right there. Now, there is some uncertainty out there whether they're going to cut or not. The question is, if they cut, will it skyrocket stocks and crypto? Now, here's what the experts are saying. Here's the headline. Stocks rise ahead of Thanksgiving holiday, building on strong gains for the week. So let's get into it. So you got stocks rose on Wednesday, which is today, this morning, putting the major averages on pace for their fourth straight day of gains. Kind of feel that momentum starting to shift. See how that momentum is starting to shift a little bit? The momentum is starting to shift, right? Last week, very volatile, up and down, gain one day, no gains the next. Things are starting to shift. Fourth day in a row now, right? No guarantees, but fourth day in a row, fourth straight day of gains ahead of the Thanksgiving holiday. The Dow Jones Industrial Average gained 188 points, or 0.4%. The S&P 500 climbed 0.4%, while the NASDAQ Composite advanced 0.4%. NVIDIA shares moved up 1%, guys, recovering from a recent pullback. Fellow Magnificent Seven member Microsoft also traded 1% higher. See where I'm going with this? See, when you start getting that Fed rate cut coming back on the table, and you start to see the probability of that rate cut increasing from 40% last week, now all the way up to 85%, what does that tell you if you're starting to kind of pay attention to this thing? You're starting to see what? A momentum swing. You're starting to see a positive momentum swing back into what? Equities and crypto. Because I believe when rates come down, assets go up. And I'm not the only one believe that. Clearly, somebody else believed that too, or you wouldn't have had the market doing fourth straight day of some nice little positivity, some nice little greenness. Now you're starting to see the biggest name in artificial intelligence start to move back up. NVIDIA. Remember earlier in the week, that thing got down to 169 per share. NVIDIA. It was 169 per share, guys. And again, guys, I'm not trying to be some expert here because I'm not. I'm just a guy that gets out here and does his research, and I read and I look at. I'm an investor. That's what I do. I don't try to be an expert. I just get out here and read and see what's going on in the world. And what I know what's going on in the world, when I looked at NVIDIA yesterday or a day before, it was down to 169 a share at one point intraday. Today, right now, it's at 180. It opened at 181.63, got all the way up this morning to 182.91. So if I'm looking at this thing, I'm looking at the biggest name in artificial intelligence, which is NVIDIA. I'm looking earlier this week, it got itself down intraday to 169. Now it's starting to move itself back up. Now I also see rate cut back on the table at 85% and climbing. Now I also see the market that has this fourth straight day where it's starting to, you know what I'm saying, stay green and close in the green. I'm no expert, but all of that sounds like good news for an investor. That's all I'm saying. And I'm trying to walk you through how these rate cuts could potentially skyrocket everything. Now, again, no guarantee. This thing might fall off a cliff on Friday. It might fall off a cliff on December 1st, which is Monday. It may fall right off the cliff. I don't know. I'm just trying to give you, as an investor, an optimistic investor, what I see happening right now and how I plan on positioning myself to be, in a position to win. That's all I'm saying. Everything might fall off the cliff. Who knows? I have no crystal ball, but I'm just following the data. The data says 85% of experts believe there's going to be a rate cut on December 10th. And guess what? Investors, in my opinion now, my personal opinion, are starting to believe that. Now you're starting to see momentum shift again. So if hypothetically, if I'm somebody on the sideline, hypothetically thinking I'm a time to market, there's going to be more of a dip. Maybe there will be, but maybe there won't be. Maybe if I'm sitting on the sideline, the dip already gone. Maybe the falling knife has been caught. Maybe I've already caught the falling knife. Maybe we starting to climb back up the stairs. Maybe the elevator is turned off. Maybe they turned off the elevator. It's out of order. It ain't working no more. The elevator ain't working. It ain't going down no more. It's not going down anymore. It's broke. Now I got to take the stairs back up. Maybe that has started. I don't know. I'm just giving you, some things to think about. You got to go out and do your own homework and figure out if the stairs, you know what I'm saying? You got to go figure that one out. All I can give you is just a little bit of. Stocks are coming off a winning session despite volatile trading. The 30 stock Dow gained more than 660 points and logged a third consecutive positive day. Listen, guys, when you start getting this momentum swing starting to go positive again, and you start to get these consecutive days where these indexes are starting to, you know what I'm saying? That's in my opinion now, my personal opinion, that's a sign that that things are starting to turn the other direction. That's what it sounds like to me. I don't know. I'm gonna keep moving here. Several tech stocks also climbed higher to lift the broader market. Alphabet hit fresh record highs on a report that Meta Platforms is considering using Google's parent's TPU chips in 2027. Chip maker NVIDIA slid more than 2.5 meanwhile. But like I've already told y'all, NVIDIA is already recovering though. It slid on that news. I believe that was the day it got down to 169 intraday based on that news. But guess what? The tide is turning. Intraday this morning, NVIDIA's at 180 and climbing. So I don't know if that'll last. I'm just telling you what the data says. I'm no expert. I'm just a guy that goes out and reads the data, and I get on my YouTube channel and I report the data to you. It's your job to go out and do additional research and make sure you're comfortable with everything before you do anything, right? My job is not to make you comfortable with what to do. My job is to report data based on my personal opinion. You got to go out and do the rest. Stocks are trying to stage a comeback from the past few weeks of declines, suggesting that dip buyers are still out in full force. I love that. Let me read that one more time. Stocks are trying to stage a comeback from the past few weeks of declines, suggesting that dip buyers, I love that, those two words, dip buyers. Dip buyers are still out in full force. Now, this is coming from President and Chief Investment Officer of Bellwether Wealth, aka expert. The depth of the market's pullback in November was only about 4% from the last October high, which is well below the typical 10% correction threshold. Let's stop right there. A lot of us freaked out. But when we really pull back the covers, when we really pull the wool from over your eyes, we only had a 4% drawdown from October highs in November. It was just 4%. Now, it felt like 40%. Ain't gonna lie. It felt like 40%. And there are certain individual stocks that you did have a bigger pullback. You did, no question. But when you look at the broader market, they're saying, this expert is saying, when you look at the broader stock market, there was really only a 4% pullback. Now, if you dive into some individual stocks, there were bigger pullbacks, right? But the broader market, he's saying, literally only pulled back about 4%, not the usual 10%. So while we expect the stock market to revisit these highs, now this is coming from the expert, this guy from the President and Chief Investment Officer at Bellwether Wealth. So go check them out. But this is what he's saying. While we expect the stock market to revisit these highs, there isn't an obvious upside catalyst to propel the market between now and the end of the year. So what he basically said is they expect markets to go back where they were in October, but he's not real confident that that will happen by end of the year. And that's reasonable. That's reasonable in my opinion. I'm no expert, but I agree with the expert. That's reasonable. That's why in my household, in my investment strategy, I've been just trying to be a dip buyer, just like this guy mentioned earlier, these dip buyers. I've been trying to be a dip buyer, right? Just making sure I position myself, because I know the whole purpose of the stock market, in my personal opinion, is to go higher. That's my opinion now. That is not what the expert said, but the expert did say, while we expect the stock market to revisit these highs. So I'm at October. So I'm in line with the expert. Investors continue to monitor catalysts that could affect the Federal Reserve's next interest rate move. Back to that interest rate thing again. How important is that? I think it's extremely important to investors. Cheerio. I think it's extremely important to investors. I do. So here we go. Traders are pricing in more than an 80% chance of a 1/4 percentage point cut from the Fed in December. That's what experts are, and analysts, traders, whoever you want to call them, whoever these people that make these big decisions. They're expecting a rate cut in December. So who am I to say I'm going to go with them? I've learned how to follow the 1%, man. It's not complicated for me. If the 1% believe it's going to happen, I'm going to follow the 1%, man. I'm not going to, oh, no, 1%, they're wrong. It's not. Okay. I'm following the 1%. I don't know about y'all, but I'm following the 1%. Treasury Secretary Scott Bessent told CNBC earlier Tuesday that there's a very good chance that Trump will make an announcement before Christmas on who will be the next Fed chair. Stop right there. Let's pause right there. I've been telling you guys, in my personal opinion, what 26 is going to be like once Trump gets his new Fed chair in there. And we already know, just like Trump has did with his cabinet, everybody in Trump's cabinet is a 1,000% loyalist. And they will 1,000% do whatever Trump tells them to do. And they just going to do that. They don't care about no consequences down the road. Them people don't care, man. Whatever President Trump tells those people to do in his cabinet, they do it. Every one of them. Every single one. Do you think it's going to be any different with his new Fed chair? It's not, guys. And we already know President Trump done went on record and said that he believes interest rates should be at least 2% lower than where they're at right now. I don't know where they're at right now. 3.5%, 4% Fed funds rate. I don't know. But I already know what President Trump has already went on record and said. He believes they should be a lot lower. And guess what's going to happen next year when Trump personally has his pick for Fed chair? Guess what's going to happen? In my opinion, now my personal opinion, I don't have a crystal ball. I can't put words in anybody's mouth. I can't predict the future. But what I believe is going to happen based on what I've already heard President Trump say about interest rates and how he feels about interest rates, whoever that person is going to be a 1,000% loyalist. And they're going to do whatever Trump tells them to do. And they're not going to worry about the consequences. I keep telling y'all, these 1%ers do not care that you people can't afford Thanksgiving dinner. They don't. I keep telling y'all, these 1%ers do not care if you guys got retirement savings. They don't. These 1%ers don't care if the economy go into a recession. Why? Because they make money in a recession too. You guys got to understand, these 1%ers make money in good times and bad times. So they care nothing about going into a recession because they're going to continue to make money. The only people a recession hurt are the 99%ers. Do not hurt the 1%ers. So do you think these people really care if they drive back up inflation? No. Why? They're billionaires. They're millionaires. They're multimillionaires. They don't care about no recession. You think they're gonna, oh my God, inflation is up to 6%. I can't buy fuel for my private jet. Yeah, they can. I gotta sell one of the beach homes. Oh my goodness. I gotta sell the penthouse in New York. No. None of these people care about that, man. These people care about making money. And they're gonna make money in good and bad times. The only people that don't make any money is the 99%ers. So all I'm telling you is they're going to reduce them, in my opinion. Now, again, guys, I'm no expert here. I'm just giving you my opinion. Based on what President Trump has said in the past, he wants rates lower. And do you believe he's going to put somebody in that chair that is not going to be a 1,000% loyalist? Come on, guys. That's why, for me, personally, I think 26 is going to be a monster. So I got to get in position. I got no guarantee on that now. It could be not a monster. But based on what I believe is going to be happening, based on what President Trump has said, and based on these rate cuts, I'm just going to get in position. So here we go. Let's finish this thing up. While he said he was interviewing candidates, expectations are shifting towards White House National Economic Council Director Kevin Hassett. Now, guys, if you don't know who Kevin Hassett is, please go out online and do your little research. 1,000% Trump loyalist. That's who Kevin Hassett is. This is the guy that goes on Fox News. He comes on CNBC. He comes on any other, corporate network, news network, and he's 1,000%. I'm talking about 1,000% Trump loyalist. And if Trump put him in there, I'm telling you, rates coming down in 24, in my opinion, if Kevin Hassett get in there. Matter of fact, no matter who Trump put in there, they're going to be 1,000% loyalist. But Kevin Hassett is already 1,000. He didn't prove it. He's proven it. So if he get in there, yeah. After Bloomberg reported he had emerged as the front runner for the job, Hassett is viewed as someone more likely to push for lower rates. I keep telling y'all. Yeah. Then this coming from Bloomberg News. They ain't got nothing to do with me. I'm just telling you, this is Bloomberg reported he has emerged as the front runner for the job. Hassett is viewed as someone more likely to push for lower rates. Looking at the overall picture, November has proven to be a difficult month for stocks and crypto. All three U.S. indexes are tracking for a losing month as concerns about elevated valuations have cooled the momentum behind some high-flying tech stocks. The S&P 500 is down around 1% in November as a whole, while the tech-heavy NASDAQ has lost about 3% in the month of November as a whole. And then the Dow is down roughly 1%. So when we look at the month of November, which is historically a strong month for stocks, historically, it has not held up in the month of November. Now, here's what my personal opinion is. And again, I'm no expert here, guys. I'm just giving you my personal opinion. Normally, in the month of September is the month where we get the pullback. Historically now. But I think what happened was, since we didn't get that pullback in September, remember September defied all odds and flipped the script, and September was up instead of down like it normally is. They still needed a month to do whatever they needed to do. I think they just kicked the can down the road, and then they chose November to be their September. That's my opinion now. Again, I'm no expert. I'm just a regular guy here on YouTube giving you his personal opinion. Go do your own homework. But I think they flipped the script. They said, okay, since we had a strong September, we got to pick a month so we can take profits and drive everything down and do all this other propaganda stuff they do every year, right? The 1% needed another month. And they said, well, you know something? We still got pretty good momentum going from September. Let's just go ahead and keep the momentum train going for October. And then what we'll do is we'll flip the script on them in November and make that our September. And then we'll run that thing back up and get ready to go for 2026. Now, all of this is speculation on my part, and it's just my opinion, but I think that's what happened, guys. That's what I think happened. The stock market will be closed Thursday for Thanksgiving. Trading will resume with a shortened trading day on Friday, when the market will close at 1 p.m. Eastern time. That's your little update, guys. I don't know. But again, no expert here, just a guy on YouTube trying to give you a little bit of my little 2 cents. I think they just, the 1%, did the old okie dokie. They said, well, okay, we're running this thing up. This thing is running up real nicely in September. Let's not disrupt it. Let's continue to get as much as we can get out of this thing before we reverse it on them. And that's what they did. I think they just ran this thing up through September. And they said, let's run October up. And then we will use November as our September so we can take profits, run this thing back down again, and then poof, be ready to go for 26 when Trump come in here with his new Fed chair. I think that's going to be around May. But you know something, things going to, in my opinion now, guys, no expert here, but I think with the anticipation of Trump bringing in this new Fed guy, I think January, February, in March and April in anticipation of this new Fed chair coming in May, I think people are going to be getting in position, man. I just think January, February, March, and April, people will be getting in position, ready for these rate cuts on the back half of 26 when the new guy comes in. Could be Hassett or whatever this guy's name is. Yeah, could be this Hassett guy. Could be Kevin Hassett. And again, go do your research on this guy. He's a 1,000% Trump loyalist. These people, listen, man, these people who Trump done put in his orbit, these people that surround Trump now, unlike Trump 1.0. See, in Trump 1.0, Trump didn't have this. He had people that were like, you know, who wanted to do the right thing, like the real, you know, people that would not agree with it. People that would say, no, Mr. President, that's not a smart idea. No, Mr. President, we ain't doing that. See, that's what he had in his cabinet and the people around him in 1.0. So he couldn't really flex and do the things he wanted to do. 2.0, though, everybody in his orbit, complete loyalists. 1,000%. They're going to do whatever Trump tell them to do. So just know that, and just know when it comes to this Fed chair thing, Trump going to put somebody in that Fed chair spot to hit that thing up. That's going to be 100% loyal. And then what is he going to do? He's going to start one by one kind of picking off the FOMC people that don't agree with him, and he's going to put people in there on that FOMC that do agree with him. Y'all do know Trump got 3 more years. And over these next 3 years, interest rates might go to 0 and stay there. Because I keep telling y'all, the 1% don't care about no inflation. The 1% don't care about no recession. See, a lot of us keep thinking they care about that, but they don't, guys. I'm just giving you my opinion now. These people don't care about no recession. They don't care about no inflation going up. Not the 1%. They want interest rates to 0. Because they know, and just like I know, when interest rates go to 0, whoo, assets, whoa. Just go back and look at the pandemic. Go look at the pandemic. That's all I can tell you. Just go back out here and do your research, guys. Go online and look at the last time interest rates, the Fed funds rate was 0. And go look at the performance of the stock market. Go look at the performance of real estate. Just go look at the performance of assets, guys. Go look at the performance of crypto, AKA Bitcoin. Just go back to the last time when the Fed's funds rate was 0. Just go do your history research, guys. That's all you got to do. Again, I'm not here to be an expert because I'm not. I'm just a regular guy on YouTube. But see, I do know, and I'm smart enough to know how to go out and look at history. All I got to do is go look at the last time the Fed funds rate was 0, and it would tell me exactly what I need to expect if Trump run them to 0. See, I know exactly what's going to happen when they run them to 0. My personal opinion is assets going through the roof. Now, that's my personal opinion, supported by what? History. All you got to do is go look at the Fed funds rate the last time it was 0. And then just track that parallel to what the stock market did, what real estate did, and other assets did. Crypto, AKA Bitcoin. Those 3. Go look at equities, real estate, Bitcoin. Go look at those 3 things the last time the Fed funds rate was 0. And just track them. Just track the progress of them. And see what happened to them. How did they move around? I'm just saying, man. Let me see if I can get Google AI to participate with me on this. How well did the stock market do the last time the Fed funds rate was 0? Let me see if I can get old ChatGPT to help me out here. Uh-oh. Hold on now. Hold on. Let me run y'all through this. Because y'all think I be just out here just tripping. No, I go out and do research and I look at the facts. Now again, this is my personal opinion now. That don't mean you go do your own homework. Now don't depend on my homework. Go do your own homework. The stock market experienced significant growth during the 2 periods the federal funds rate was near zero. It says, while the initial cuts were associated with market turmoil, the subsequent periods of zero interest rate policy, and here's the little acronym for it, ZIRP, that's what they call it for short. ZIRP fueled a prolonged bull market and a strong recovery. Right there. See? All you got to do, guys, is go out in there and do a little critical thinking. Go do a little critical research. I'm telling you, this is what the last time this thing was at zero. Fueled a prolonged, you do know what prolonged mean, right? Prolonged, that means long time. Bull market and strong recovery. So you're talking about, here are the last two zero rate cuts. Here are the 2 periods now. Here's your last 2 zero rate cuts. Go back and do your research now. I'm just giving you the numbers. December 2008 through December 2015 was one of them. And y'all already know what happened between that time. There was a lot of wealth built from 2008 to 2015, guys. I participated in that one through real estate and through equities. I participated through real estate purchases and through equity purchases. Here's the second one, most recent one, is going to be from 2020, March 2020 to March 2022. What's so significant about March 2022? That's when the Federal Reserve started increasing interest rates again. And guess what happened to equities when they started doing that? Go do the homework, guys. See, this is what I'm trying to get you. You got to be critical thinkers. You got to be willing to go do homework. Don't be sitting up here watching somebody on YouTube and podcasts, and that's where you get all your research from. Don't do that. Go do your homework. Think about it now. Be smart about this. March 2020, what? Pandemic. Interest rates go to zero. March 2022, Fed start increasing interest rates, 75 basis points at a time. To do what? Fight inflation. But in those 2 years, guess what happened? Assets went crazy. Go look at what happened with real estate, guys, between March 2020 and March 2022, March 2023. Go look and see what happened with real estate prices in the United States. Go look at it. Go do the research. Look at what happened to equities and Bitcoin in those 2 years. Guess what's getting ready to happen again, in my opinion? President Trump is going to get these rates to zero. That's my opinion now. I don't have no proof of that, other than what he has already went on record and said in 2025. That's all I'm telling you. I can't speak for President Trump, but I do know what he has said in 2025 about interest rates. He's been attacking Federal Reserve Chairman Jerome Powell all year long, calling him too late Powell. And guess why he's calling him that? Because he wants interest rates down. Because he understands when interest rates go down to zero, everything skyrockets. And that's all the 1% are interested in, guys. Just my opinion. Now, you guys go out and do your own global research and figure this thing out for yourself. But I just wanted to give you all those little quick little 2 cents and let you know I'm not a financial advisor. This is not financial advice. I'm just a guy here on YouTube trying to give you guys a little bit of my research. I'm just telling you, if we're trying to build ourselves some wealth, if we're trying to do long-term wealth building planning, because ultimately the 1% don't want you to build any wealth. They want you to be broke. They want you to be dependent on them. They want you, the only thing you have that you can look forward to in your old age is Social Security. That's all they want you to look forward to, because that's how they can control you. They use social media to control you guys, because they know we're a country now that don't do any critical thinking. They know we're a country of people that are so obsessed with fighting battles online, whether it be politically, socially, whatever it is. Any little battle we can fight online and get mad at each other, we do that. But when it comes to our wealth, We will not do any critical thinking. We will not do any homework. We'll just sit here and let them tell us all they want to tell us. And their whole mission is to keep you broke and dependent on them. Now, all of this is just my personal opinion, guys. You don't have to believe me. But I'm telling you, go out and do the homework. I'm trying to put myself in position so I can be prepared when President Trump put his new person in there and they start taking this Fed funds rate to zero. I want to be in position. Because that thing gonna happen so fast that if you ain't in position, you'll miss it. That's my opinion now, personal opinion. And the 1% want you to miss it. So what you can do is go out online, go do you some research, go do you some, and then critically think through, okay, here's where I'm at today. How can I put myself in position to take advantage of a Fed funds rate that potentially could go to zero in 2026? Guys, these guys ain't messing around. You know, say what you want to say about President Trump. The guy don't mess around. When he want to do something, he just do it. He don't even worry about no optics. He don't worry about what y'all gonna think. He don't care about no, He's just gonna do it. That's what he does. So if he want them rates to zero, guess what? They going to zero. Either you get in position or you're not in position. Either you put yourself in the game or you keep yourself on the sideline. That's up to you, man. All I'm trying to tell you is there's an opportunity coming. Opportunity's knocking. There's an opportunity coming. Now, we can sit up here and fight all these battles that ain't got nothing to do with providing us freedom. We can sit here and fight these battles now. They want us to do that. They want us to be online and fighting all these little battles and all that. Don't get me wrong, guys. Ain't nothing wrong with standing up for something. But, you know, prioritize what you stand up for. Number one thing I want to stand up for is to protect my family and my financial situation so that I can live in this country. And then if I got some time left over and I want to go out and go down a rabbit hole, I can do it then. But I'm not going down the rabbit hole and I'm out here with no wealth, no protection. My family ain't got no protection. And I lose my job. I can't pay my rent. I can't pay my mortgage. I can't provide no. You know what I'm saying? All I'm telling y'all guys is these 1%ers, man, they're going to continue to widen that wealth gap. We got to do something as 99%ers to stop that. And the way we do it is we take, in my opinion now, the way I'm going to do it, I can't tell you what to do, but the way I'm going to do it is take my income and I'm going to get in position and get ready for this rapture. I'm going to get my income and put it in something and get ready for the rapture. Because it's coming, in my opinion now. That's my humble opinion. It's coming. Just based on everything you can already see it starting. I think in the month of December, you're going to start seeing a real shift in big boy investors. Because these big boy investors know when 2026 roll around, when Trump get his new Fed person in place, the big boys already know what's up. And they're going to start positioning right now. That's my opinion now. Like I said, guys, get down in the description box. Check out that Moomoo link. The good folks at Moomoo are willing to give you up to $1,000 in NVIDIA stock if you open a new Moomoo brokerage account, and you have to have a qualifying deposit in order to qualify for those NVIDIA stock. So check it out, self-directed brokerage app. I've been rocking with them since 2024. I like them. I'm able to do fractional share trading. I'm able to do automatic investing, which are two really nice features for a busy guy like me who just wants to dollar cost average in, rain or shine. It's a beautiful little system. Again, I'm not saying it's the only one out there. There's plenty of them. But I'm just sharing this with you because you also can get a benefit. The benefit is great brokerage account, plus potentially get you some NVIDIA stock, which is the most valuable company in the world by market cap. You go check that link out, see if it's right for you. And if it is, execute. If it's not, don't execute. Second link, Wealth Builders Financial Community on Patreon. Community I started in 2024, and we do great over there. We do great work together because we've taken ourselves out of the matrix where the only thing we can look forward to is a Social Security check. We've taken ourselves out of that matrix. We formed our own community, and we said, no, that's not good enough. We want to build our own independent wealth. We want to get the financial freedom, and we want that financial freedom to produce passive income for us. Now, I'd rather get with a group of people going in that direction that can help me with tips and nuggets and best practices and what's working and what's not working. I got a guy that I can DM and hit him up in the DMs on Patreon and say, hey, man, here, you know, boo, 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 boo. I don't know. If that's important to you, check us out. If it's not important to you, keep doing what you're doing. But you'll keep getting the results you've been getting. Period. Definition of insanity. Doing something, same old activities, but you expect a different result. No, you don't get no different result. You do the same activities, you get the same result. You want to change the result, change the activities. Maybe the wealth builders is a change of an activity. Because right now, if you don't have any wealth and you ain't got no passive income, the activities that you're doing contributed to that. So if you want to change that in the future, guess what? Change up your activities. I'm not saying the wealth builders is the only thing out there you can do, but I'm saying it is one thing you can check out. And if you like it, rock with it. If you don't like it, throw it out the window and keep moving. Second link down in the description box. We'd love to have you. Hit me up in the DMs and let me know. We can go to work. Appreciate y'all for stopping by the channel, man. And if you're stopping by for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, then hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. Catch you guys on the next video. Peace.